don't give up. Any challenge you see, just assume it's an obstacle to go around. Be creative, solve around those, and good things will happen.
Alrighty, hello everyone, and welcome to the Deal Maker Show. So today we actually have a really amazing, founder with us, a founder that has done it multiple times. We're going to be learning the building, the scaling, financing. All of the above, even taking companies public, what it is to be part of cycles, different tech cycles, the glimpse of really getting companies off the ground, as well as the difference between starting a company in your 20s versus maybe in your 40s or 50s, which is not the same thing. So brace yourself for quite the inspiring conversation to the end. Without further ado, let's welcome our guest today, Lyron Bentovim. Welcome to the show.
Thank you, Alejandro. Pleasure to be here. Looking forward to a great conversation.
So, born in startup land, startup nation. Give us a walk through memory lane. How was life growing up for you?
Well, you grew up in Israel. You basically have startup in your veins, so it's part of the culture. Starting things, kind of taking risk and succeeding, and that's kind of what I've been doing all my career.
How did you experience life moving a bit around? Because you were in Israel, then in the UK. What kind of perspective and lens did open up for you?
It gives you an ability to look at wherever you are, whether it's the US or Israel or England or the world, almost like from an outside perspective. So you're not in and you're looking at things like everybody else. You have that different perspective because you see it from different angles. And I think that makes a big difference. The other is the ability to kind of not be afraid of change, not be afraid of moving around, and not be afraid to kind of take risks and kind of do something different because you've done it before. You've moved between different locations and proven that you can be successful wherever you are. And I think that's a big lesson.
And in your case, talk to us about getting started with your first baby, with your first company. It was in the food space, but how was that?
So I was kind of very young and kind of basically got together with a friend of mine, and we were kind of basically looking to do something. And again, kind of had that kind of entrepreneur kind of spirit. And we looked for a business, and we found this ice cream store that kind of was doing okay, but not doing great. And we thought that it had great location and great potential. And we bought it from the owners, and the owners actually had the factory at the time, and so they were supplying us with the ice cream, and we changed around the whole place. We redecorated it, we changed the menu, and kind of opened it up, and it was like a great success. It was a good first chance to understand how a business works, kind of how you balance basically the kind of the payables and the receivables, how you deal with customers, how you acquire customers, all of those things that you learn in a big scale later in life. I got a chance to kind of do them early on.
And in this case too, you ended up selling your portion to your co-founder, and it's something that you've done twice. So I think that the question that comes to mind is, at what point do you realize, in the journey of building a company, that it's perhaps the right time to turn page?
It's kind of when you look at kind of what you've built and you say, you know what, I've gotten it where I wanted to get it, and now I'm more interested in kind of challenging myself with something different. And when that time comes, when you feel it, and sometimes you feel it after a couple of years, and sometimes it takes longer. Obviously, I've been running Glimpse now for almost 10 years, so kind of haven't had that itch yet.
And what would you say is the main difference now that and we'll talk about Glimpse in just a little bit, but what would you say is the main difference of, let's say, starting a company at that such young age versus maybe in your 40s or 50s, like you've been able to experience now with Glimpse?
It's kind of when you start a company when you're young, you've got a lot of enthusiasm, you've got a lot of energy, you're running around, but you haven't seen a lot of the world. You haven't seen it all play out. And you're eager to kind of push things forward at a totally different pace than how you do things where you're more mature. You're taking setbacks differently. Kind of, you're not seeing them as kind of basically life changing, but more of a hurdle to pass around. You're basically taking no differently. Kind of when someone says no, you try and figure out kind of how to work around it. You also kind of look at the business differently in terms of your willingness to pivot. And I see it a lot with younger founders where they've got kind of what they figure out is their kind of dream of what they want to build. And they set up doing it, and they don't have the willingness or the ability to almost look from a different lens at what they're doing and say, you know what, maybe I should pivot a little bit to kind of adjust and align my vision with what the kind of what the world's telling me. So I think when you're more mature, you're dealing with situations in a different way and getting to be more creative in resolving challenges.
How was it like to for you to come to the US? Because you came here for your MBA program at Yale, but how was that like? Of coming here to the land of opportunity, to America.
Yeah, and I really saw kind of coming to the US kind of as coming to a large opportunity where you can do things at a totally different scale. And my philosophy, kind of, which kind of, when I look at kind of immigrants coming in, there's two philosophies. One, you basically kind of stay within your group and you're just going to live within your people, or you come in and you say, I'm coming into this country and I want to be an American. And for me, from day one, when I kind of arrived kind of at Yale, kind of, I wanted to look at things as an American, to act as an American, to focus, I kind of keeping my identity with myself, but kind of really kind of embracing, kind of connecting with this kind of land of opportunities.
Now, after Yale, you basically went into what the next company that you would do was essentially another one, which was a Whip Bricks, and there you had the opportunity to of experiencing cycles. In this case, it was the dot com bust, right? So, how was it like going through something like that, and what kind of lessons do you think you learned? Because a lot of people are now talking about another potential correction coming. Markets are behaving in a crazy way. Uh, I guess what how was that experience with WebBricks?
Yeah, so it's kind of obviously it sucked, kind of given the timing, and I've learned a lot of lessons from it. But when you kind of and kind of, I'd love to talk about some of those because it's kind of life lessons learned. But kind of taking the cycle first, just to understand the digital cycle, which the dot com crash was a part of. The technology cycles, in my view, are 30, 35-year cycles. So the digital cycle started in the 1980s, and that's where I started exposing myself to technology. I remember seeing basically an ad in when I was in the UK for the ZX81, which was one of the first computers with 1K of memory. And I thought that was the coolest thing ever. And I started a campaign with my parents to basically kind of let me buy one. And it took me about a year, but eventually ended up with slightly more advanced version as things evolve. And if you look at the dot com bust as part of the lens, it is basically probably two-thirds of the cycle. So kind of, so it started in 1980. The dot com bust was in 99, 2000, and basically the cycle continued all the way to 2015. And it was basically it's almost like the market cleared itself up. So kind of if you're kind of basically get caught on it, and kind of obviously I was caught on it with rubrics, and one of the lessons I've learned is never say no to money. Kind of when we started the company, we had a lot more money that wanted to invest in us than we wanted to at what now I perceive as crazy valuations. We raised money at 10 million valuation for basically a business plan and a couple of kids. And we said no to money, if you believe that. And when you look at that, you say you're crazy because kind of when we wanted to raise the money back kind of in later in 2000, the markets crashed and people didn't want to touch the internet, even though that was not the end of the cycle. It was just a blip. And if you look at kind of where the companies that won, they were strong enough to go through that cycle. Take Amazon as an example, and come out stronger, and obviously become dominant in what they're doing. So many lessons learned. First of all, kind of basically don't look at this as the end of the world, but just a kind of a part of the cycle. Learn to survive through it, which I think a more mature me would have survived that company kind of through that cycle, and then kind of position yourself for further success as the cycle continues to happen.
Now, one thing that I think gives you an advantage. I mean, some people may look at it as a disadvantage. Just jumping from one industry to another. I do see it as an advantage because it gives you knowledge transfer. You're able to apply some of those lessons, into a different field. I mean, we've seen that with people like Elon Musk, going from payments to like cars. I mean, you see it. I guess in your case, being able to jump from food to a web to hedge funds, back into tech, more like the VR space. What have you learned about being able to grab lessons from a different industry and apply that in a way that gives you an edge to whatever new segment that you're looking to tackle?
You raise a really really good point, and that's kind of that. It's I think very powerful to be able to basically innovate within different environments and take lessons that work in one place and apply them to the other. And that's true for both basically startups, but also kind of some of the lessons I've learned in public companies. And I look at everything I do as an experience. You learn a new industry, you need to get up to speed very quickly. So first of all, I'm not afraid to get into a new industry. So when I started Glimpse, I didn't know anything about virtual reality. Now I've been doing it for 10 years, so I think I know as much as anyone out there. And that's true for all the industries I was in. And the ability to take things that you learn working in one company and then applying them to kind of new opportunities is a way of kind of innovation that entrepreneurs should always do that. So kind of people should not restrict themselves to just kind of their comfort zone in terms of either technology or industry or kind of what they do, but kind of expand their horizons and will make them kind of something that kind of you're talking about Elon Musk, or you can go back in time to Leonardo da Vinci and kind of all the different things he did, and he applied a lot of those things to kind of the things that he was doing. So kind of he was a better artist because he was a better scientist, and back and forth.
So for you, then the next stop was hedge funds. Why out of all things entering the hedge fund world?
It's kind of an interesting story because so I was just basically kind of unwinding Webrix, which was a hard for me to do because that was like my baby and that was like something I really believed in the vision. And for a long while, I used to kind of carry the boxes with all of our materials. That was before everything was fully digital, hoping that I will resuscitate the company at some point. But I was looking kind of back then. I was living in California, so I was in San Francisco Bay Area in the kind of dot-com bust. And everywhere you looked, there were tons of companies that built really cool technologies that all were out of money. And I was looking around and I had this story of basically kind of what if I can combine all these kind of broken companies together and make something out of it? And basically, so I started running around talking to companies and investors and VCs and trying to see if I can kind of piece all those things together. And the challenge was every time you start showing interest in any company, suddenly their investors would kind of wake up, even though the company was dead, and tell you that company is worth a lot, and they're not going to give you kind of access to their technology or their IP or their team unless you give them a lot in return. And so there was a lot of challenges dealing with the private company. And then someone introduced me to Russ Silvestri, who became my partner in starting Security, and he was dealing with the public company. He said, "You're looking in the wrong place. The VCs will never give you what you want, but let's look at the public market and see what's there." So this was 2001, and we were looking. Our office was in San Francisco, and there were 550 companies trading below cash within a 100-mile radius from our office in San Francisco, below cash, because all of them had technology and businesses and what have you, and they were trading below cash. So we said, "Well, this is crazy opportunity. How do we kind of know what's real and what's not?" So we got in the car and started driving around, meeting with managements, talking to them, understanding who's going to make it and who's not, because we're getting the business for free. And that's kind of why we started. That's how I evolved into hedge funds, and basically kind of taking kind of what I kind of learned from my startup and understanding technology, and what I've learned before doing management consulting and working with C-level executives in large companies, and then bringing that and really working with the companies we invested in to try and help them position themselves for success. And that was very successful because the opportunity when we started was kind of like once in a lifetime opportunity.
So again, at what point do you realize I'm tired of this thing, or it's time to start a new chapter because there you guys were able to get it to about 100 million in assets under management. So why why turn and shift direction?
So as we were evolving the fund, I started taking more of a operating partner role, and I would work with our investments and work with the management team. But I was kind of on the outside looking in, so I would be an advisor or kind of just an investor, or sometimes I would be a board member. And I started getting the itch to actually do things. Kind of, so I don't want to just invest or advise. I want to actually operate. And when the opportunity came, that was Sunrise Telecom, where I was on the board, and they needed a turnaround, and the board basically challenged me to basically take what I was telling them that needs to be done and actually go and do it. And I figured that would be a great opportunity for me. And I talked to my partner, and I basically told him, "Look, I think I need to do something different." And we are still good friends to this day. And I sold him my piece and moved on to basically the operating world.
Well, Sunrise and Top Image, basically gave you the opportunity to say taking a look at how to turn things around, and that is quite the challenge, I guess. During those experiences, what did you really get about turning a company around and being able to turn the table so that you are giving the opportunity for something to thrive, to not only survive but then also to thrive too, no?
Yeah, and kind of so the first thing to do is to understand the challenges. So a company that is facing a need for a turnaround, you need to understand the problem. And kind of going back even to the hedge fund days, kind of I would tell my analysts when we're analyzing companies as we're looking at investment, that usually we would come into companies that were kind of basically down on their luck, their stock has been down. And I would tell my analysts kind of until you understand the problem, why it's there, then you haven't done enough research. So once you understand the problem, the next question is, when you're an investor, obviously does management know how to solve it? When you're turning it around yourself, is how do you address that problem? What is kind of why is the company challenged, and how do you address that? Sometimes it's a business issue, sometimes it's a customer fit issue, sometimes it's a product issue, sometimes it's a cash flow issue. There's a variety of things that could impact companies. You need to understand what they are, and then but really target kind of your effort on the problem. And I think I did that very well in both these opportunities in terms of understanding what can be done differently and how to make it done differently.
Now, for you, it took a little bit to get going with your next one with Glimpse, and I'd like to know what needed to happen for you to go at it again.
So I was looking for the right kind of, for me it's all about kind of what drives you and getting the passion for what you're doing. And so when I kind of finished the kind of my role in the turnaround of Top Image, I was looking around and kind of basically immersive technologies really started appealing to me. I've been following them from the 90s, but they never looked like they could actually become a real business. And when I started doing some reading in 2015, it looked to me that we're in the beginning of a new tech cycle. And now going back to our story earlier with the tech cycle, I was always chasing it in the previous one because it started when I was in middle school. So it's kind of hard to be at the top of the game kind of when you're kind of starting very young. So I got to play in it, but it wasn't kind of, I was always chasing it. And the opportunity here was to get into a tech cycle, which I think is what I call the immersive tech cycle. Kind of immersive technologies, virtual reality, augmented reality, together with AI and blockchain, are going to move us from a digital world, which was the end of the previous tech cycle, to an immersive world. And when I saw that opportunity, I was like, okay, this is what I want to do. I want to take all the lessons I've learned in my career and put them together. And starting doing research on the technologies and what was the scene in New York, where I was based at the time, in terms of who should I go talk to. And that's kind of basically led for me kind of getting ready for my next startup.
So let's talk about the next one, the Glimpse Group. How did you decide? What was that day where you decided to take action and bring it to life?
So it's a funny story and shows you kind of how timing is everything. So I was talking to a friend of mine who's a kind of a, I guess, a silent co-founder in the company, and we were talking about virtual reality and what's going on, and kind of we were chatting. I was sitting at home. I lived in New Jersey at the time. He was in his office in Manhattan, and I was searching basically, and I googled NYVR, which is New York VR. Kind of that would be a logical thing to look for. And the first thing that popped up was the meetup that was run and still is run by my co-founder DJ, NYVR. So that was the first thing. Now the timing is interesting because that was 5 o'clock on a Thursday, and they would meet at the time every Thursday, or the third Thursday of the week at 6 p.m. kind of in Manhattan. So I basically kind of convinced Ariel, the guy I was talking to go visit the meeting. It was fully sold out because it was beginning to kind of really become like a hot thing. So the meetup with 300 spots was fully sold out. He got there, talked himself into it, talked to DJ, and he was texting me throughout, Ariel, saying, "Oh, this is amazing! This opportunity is big. We have to do something about it." And I said, "Well, like, take this DJ guy and see if he wants to have lunch with us next week." So he got us to meet him for lunch, and that's the funny story. So as I was walking for lunch, we were meeting in an Irish pub in New York, which there's too many of those. And I thought I knew which ones, but apparently it wasn't the one I was thinking. So I had 10 more minutes to walk. And as we were walking, kind of basically, kind of the concept, the model for Glimpse of how we built Glimpse came into mind, and I kind of basically kind of settled on what I want to kind of say. So when I sat down after we kind of got introduced, kind of DJ asked me, okay, what do you think we should do? And I came up with the whole Glimpse model of basically kind of rolling up multiple early stage startups and building scale in an industry that doesn't have scale initially. And he was like looking at me like, I've never heard of this concept. I said, yeah, I just made it up like walking here. But we agreed it was the right time to try it. Obviously, DJ was running the largest meetup in the city for immersive technologies, second largest in the world. So he was connected to a lot of the startups in the scene. So we started bringing those companies in to meet with them and see who would fit what we were trying to do and who would be interested. And at the same time, we started exploring how do we get kind of our seed financing, and combine both of those to start a company. But
Amazing.
that was the start. That's how it started.
Now, for the people that are listening to get it, what ended up being the business model of Glimpse? How do you guys make money?
So we're basically a software company. So Glimpse is multiple setup is multiple what I call best of breed software companies selling immersive technologies to enterprise customers. So we basically sell software solutions in a variety of different areas, from military and defense now to marketing to healthcare and education. We have different companies that are focusing on different areas with different technologies, but they're all fully owned by Glimpse. And Glimpse is basically managing and operating those companies. Obviously, they're run day to day by their general managers.
How has it been to the process of going through the cycles and raising money here? I mean, you guys have raised about 50 million bucks. So how has it been, to raise the money?
Well, raising money is hard, and kind of I get a lot of founders talking to me, and a lot of people are asking for help in raising money. And I said, raising money is probably one of the hardest challenges in starting a company. You have to sell a dream to multiple sets of investors multiple times. Uh, when we were raising money for Glimpse, I did not want to go the VC round because I think there's a lot of misalignment between VCs and entrepreneurs. And since I had a vision of where I wanted Glimpse to go and I wanted to take Glimpse public, I had a different cycle. So we were focusing on high net worth individuals, family offices, and we did a lot of small rounds where we had to kiss a lot of frogs and found some princes every now and again. And then obviously in the public market, it's a different challenge. It's still hard. There's a lot more ability to raise money when the money wants to be raised. So you don't raise money when you need it. You raise the money when there is interest in your company enough that would make raising money viable. And it's a totally different skill set and art than raising money for a private company. And you get to learn how to do both.
How has it been to the journey of taking the company public and being listed. I mean, that sounds challenging.
Yeah, no, it was definitely a whirlwind. So when we started Glimpse, the vision was always to take the company public. Again, since I grew up and learned about the previous cycle, I knew that kind of companies that would be ready to go public early would benefit from that kind of first mover advantage. And so from day one, for example, we audited the company. The first year, the auditor was looking at us and thinking we're crazy because I think in our first year we had $70,000 of revenue, and the audit would cost probably more than that. And the auditor was trying to figure out why we're wanting to audit that kind of that business. But it worked out very well because when the window opened in 2021, and we thought that we could take advantage of the interest in immersive technologies that was just emerging, we were ready to go public. And within 6 months, kind of from when we decided we're going to go for it, we were public in a kind of direct regular NASDAQ IPO, which was pretty cool. And it's one of those dreams to kind of basically take something from a concept in your head to a large, viable public company. But also, you have the challenges of being a very early, small public company and dealing with kind of having to explain kind of delays in technology, which happens all the time, to the public investors instead of just dealing with your board and a set of investors that's supporting you. So again, kind of everything has its pros and cons, and you have to learn to navigate those.
But one of the pros is definitely being able to increase the valuation without moving a finger while you're almost in your sleep. You know what happened with that story with Meta that really shoot up your guys' value?
Yeah, so there was a day kind of back when the kind of metaverse, everybody was talking about that, and Facebook decided that they're going to rebrand from Facebook to Metaverse to Meta. And when they announced that, obviously it had impact on them, but everybody was looking for what else they can invest in that ties to that kind of metaverse dream. And we were the only pure play company selling software solutions in that space. And our stock went up more than 50% that day. And initially, I wasn't even paying attention to it. And then I started getting texts from my board members saying, "What's going on with our stock?" And I called our bankers and say, "Guys, kind of, you've been asking if we want to raise money or not. I think today's the opportunity." It was like around 2 in the afternoon. Obviously, market opens until 4. I said, "Well, kind of check this out. If you think you can do it, let's go raise money tonight." And they worked. By the time I had dinner with my wife, we were already kind of locked to raise money. I stayed up all night working on all the legal documents with the bankers and lawyers, and when we woke up in the morning, we had the 15 million more in the bank. That's the power where it works of public excitement around a public company.
Yeah, no kidding. So, Liron, imagine you go to sleep tonight and you wake up in a world where the vision of Glimpse is fully realized. What does that world look like?
Very immersive, I'll tell you that. It's a world where we do everything we do today digitally. So, this conversation, for example, I'm looking at you flat. Imagine if I could see you kind of with me in the same room. That's the power of immersive. So, we will do these meetings. All the Zoom calls we're doing will be in virtual offices. We will do support groups virtually. We will kind of have fun and travel virtually. So that's the world that Glimpse and our kind of subsidiary companies are trying to create.
Amazing. Now, we're talking about the future. I want to talk about the past, but doing it with a lens of reflection. Imagine if I was able to put you into a time machine and I bring you back in time to the moment where you're thinking about launching something of your own, before you started your food business. And let's say you're able to give that younger self, that younger Liron, one piece of advice before launching a business. What would that be and why, given what you know now?
That's an easy one. Don't give up. Just kind of any challenge you see, just assume it's an obstacle to go around. Be creative and solve around those, and good things will happen.
I love it. Well, Liron, for the people that are listening that would love to reach out and say hi, what is the best way for them to do so?
Best way is probably on LinkedIn. Lyron Bentovim, kind of pretty easy to find, unique name. And also feel free to email me, Lyron at theglimpsegroup.com.
Easy enough. Well, Liron, thank you so much for being on the Dealmaker Show today. It has been an absolute honor to have you with us.
It's been my pleasure, Alejandro. Thank you.